Hey everyone, thank you for joining our fireside chat. My name is Gillian Darko and I'm currently the General Manager in Market Operation at JUMO. So starting off, banking is changing rapidly with new digital technologies and legacy banks fear being left behind. In recent news, we've seen giants such as JP Morgan and Goldman Sachs with the creation of markets create new DFS products, new challenger banks gaining unicorn status in Africa, which provides new customer-centric focused products to the growing population on our continent. In our chat today, we tackle the fireside chat and we answer the exam question. The future is open, reshaping banking through virtual presence. So we look at the current landscape in Africa. What is the problem when it comes to legacy systems? Can they survive? Will digital financial service products change Africa? What solutions can be brought? And regulation, is this a pathway to success or is this a constraint? On our panel today, we have Mr. Bhairav Trivedi and Mr. Thomas Puschmann. Would you both be able to introduce yourself to everyone on the call and maybe provide to them a key nugget about yourself? And in regards to the topic that we're discussing today, what keeps you up at night?
Excellent. So, Gillian, let me go first. Thank you so much for having me on this panel. As you mentioned before, my name is Bhairav Trivedi. I am the CEO of Crown Agents Bank in London. My background has all been in financial services with a big focus on FinTech. Prior to this, I was the CEO of Network International out of the Middle East and drove that business, took it to an exit, as well as, subsequently the company went public on the London Stock Exchange. I started my career very early on in this space many years ago when the internet was fascinating. So that tells you how old I am, right? And at that point, we were looking at the remittance market, and I started a company that provided back-end infrastructure to remittance companies in 2000. So this was pre 9/11, and with a big focus on technology that was focused on compliance, and subsequently the company was very successful and moved on. In terms of anecdotally, I have worked or lived pretty much in every continent except Latin America, and which is surprising because I'm from the US, but and I haven't really worked in the closest continent to us, but other than that, every other continent in the world. Thank you.
Thank you very much. And Thomas.
Yeah, thank you very much, Gillian, for the invitation and for the possibility for joining this panel. I'm the founder and head of the Swiss FinTech Innovation Lab at the University of Zurich, and also a member of the Swiss Innovation Council, which is taking care of transferring innovations from research into commercial solutions. I've been working in this field of digital banking since 2008. So also very early when Bitcoin was born. At that time, especially the banks weren't very open to these topics and had to deal with the financial crisis still at that time. Of course, there were other things, but that changed now, which I think is very, very good. What keeps me up at night? You asked that question. Well, it's everything about what changes the financial system at the moment. And I think there are two fields. One is DeFi, decentralized finance, which currently really is a paradigm shift in the whole financial sector, trying also to challenge the incumbent system. And the other one is on the sustainability side, where we see that sustainability on a broader scale, which not only includes green, but also other things like financial inclusion and things like that, really, especially after COVID-19 came up to the agenda again, more seriously than they were before. So we see also that these two topics currently come together very much. We named that sustainable digital finance because sustainability is not possible without measuring, without having data of the firms from the real economy, how sustainable they are. So there are touch points between the two topics here.
Excellent. Thank you very much. So just kicking off, if we'll dive into the questions. The first is setting, obviously, the landscape, what is happening on the continent. So Bhairav, I was hoping that you could set the scene. What is the current situation in Africa?
Fascinating question, right? I mean, I think what's happened is Africa had a need to migrate into digital financial services just because of the infrastructure not being there to promote traditional services. And so we find a lot of leapfrogging that took place. I mean, if you look at the geography, and again, at Crown Agents Bank, we've served Africa for several years. So we've been in there and we've seen the migration across all of these. So if you look at the infrastructure now, I mean, Africa's probably got the most mobile wallets in there. They've got a lot of migration to digital financial services. And look at what it's done on the social spectrum, right? I mean, it's made tremendous financial inclusion, huge strides in technology. I think one of the other things that we have also, which we see a lot, is a lot of inflow of remittance coming in. And that is promoting entrepreneurship in the region, besides the social impact of all of those. And that's making a huge deal. So I think I look at Africa and say, wow, this is geography that's really leapfrog technology and move to the point where, I mean, you know, look at the success of things like Safaricom, right? And their old M-Pesa, and all the way down to even in Ghana, I see, you know, the digital financial services are all over. I mean, I can stop at a traffic light and someone selling me water and things like that. And if I don't have cash, they're willing to take mobile money. So that tells you how far advanced we are. I think it's fascinating. The stage is set. I think Africa will see a leapfrogging in technology, and I'm totally enthused about that, as are we at Crown Agents Bank, because that's the infrastructure we support.
No, I 100% agree with you. I mean, when I was growing up, I remember always hearing Africa is rising, where for now, I can wholeheartedly say that I am seeing it on the continent. We are changing, we're leapfrogging, like you said, and in the institution, the company that I work for at the moment, we're champions of financial inclusion. Mm-hmm. So that takes me to the next question. And this one is actually for you, Thomas, because when you said what keeps you up at night, you spoke about the fact that you're looking at legacy systems. So we know that new innovations are driving rapid improvements in the quality of services delivered to customers. That increases competition, it raises the customer expectations. But when you look at legacy systems, some can argue that there are several steps behind in getting this done. So there is the banking manifesto, and this is a document that has been published by Alex Lipton and David Schroer, which highlights the need for legacy systems to change. So a question to you, Thomas. How are traditional banks struggling, and how can they change?
That's a very good question for that one. But if I look back now, 20 years from now, when the first internet bubble burst, there was a discussion going on whether we still need banks. And that turned out not to be right. So we're still having them, which is good. And there was also discussion going on at that time whether the systems that the banks operate on, which at that time were already quite old in some cases, need to be redone. That turned out also not to be right because the pressure wasn't there. So now, 20 years later, we are almost in the same situation again, with a little difference here. I think what we have seen is we have seen more than 20,000 FinTech startups emerging globally. Probably it's even more. Nobody knows exactly. Then we've also seen the big tech companies who went into that space, like the CCAFs, all over, who are built on a very different model. And I think these developments, together with new technologies that were arising now, made up the case. So there are new possibilities building up new systems on the one hand side. There are new competitors out there on the other side. So I think this makes the case for change. And we can see that at the moment that the incumbent banks are changing a lot. So they are cooperating with startups. They are redefining and redesigning their systems. They're opening them up. They're opening them up with open application interfaces, things like that. So there's happening a lot. But I think also it still takes some time until we are there. And if you look into Africa more specifically, there's a lot of things going on. And I think one of the basic infrastructures there in payments and especially in remittances is currently evolving. There is Movadi's cross-border remittance systems, or the regional platform between Benin, Burkina Faso, Cote d'Ivoire, and so on, and also the South African community development countries, which are also renewing their retail payment system. So there are a lot of things going on which really drive innovation there, and I think this is really the basis then to have also innovative services which make the case for more digital for everyone then.
Thanks a lot, Thomas. You've really given us a lot to think about. And what I really want to really go into now is when we talk about change and the examples that we're seeing on the continent. So especially when it comes to, like I spoke about, being a financial inclusion champion and dealing with that complex problem. You know, in Africa, where a large amount of unbanked and underbanks reside, legacy systems and how we solve this problem, it's crucial. So we have seen, for example, with the Bank of Ghana looking at CBDCs and with Nigeria with the launch of e-Naira. Are there any other changes that you can see on the continent that is a positive, or maybe we should spend some time in analyzing CBDCs on the continent, and if this would be a good way in solving the complex problem of financial inclusion? This is a question to both, so any one of you could come.
Okay, yeah, maybe I can start. I have some things in mind. So central bank digital currencies now emerged after privately issued stable coins, like, for example, Facebook's Diem were announced. So this came up very quickly because the central bankers recognized that they have to do something. So I think there is a big chance here for innovation, although I must say this also takes a longer time. If you take a look at the first-hand examples, the Bahamas now launched it. There are a few other examples that are very close to it. Bank of England also does. I think this is something very promising, which has a lot of potential also. I think one key element for this, especially also for Africa, where there's a big chance, is to have a digital wallet on a smartphone that everyone has there, and to have money distributed and also to be able to pay with this wallet over this smartphone. So this is a great opportunity. I think, which really allows innovation. And for this, you also need a digital ID, because authentication is a prerequisite in order to use that. So an ID in combination with a wallet and a CBDC, which is also multi-currency capable, so that you are able to pay and receive money with this wallet in different currencies, would be something that would really be very important and would also allow innovation in many other areas.
And Gillian, I wanted to add to that. I think Dr. Thomas is absolutely spot on that piece. Right now, number one, let's go back a little bit on digital currencies. I'm a huge proponent of digital currencies. I do believe that they address a lot of issues that geographies and countries are facing today. I mean, think about the fact that today, if someone wants to send a Naira to a CD, they actually need to go up to a US dollar and then come down again, right? And that takes time, that takes, there's leakage in the system, etc., right? I mean, are able to address a lot of those with digital currencies. That being said, digital currencies came about because of the birth of crypto, as Dr. Puschmann mentioned earlier. And so I think with, and now crypto is looked at more as a speculative, coin. And so you want a fixed value on that, which is why the stable coins have been hugely, beneficial for us in the CBDC world. But as I look at CBDC, we also have to go about it in a phased-in manner so that we get it right. Think about it. Someone needs to issue the CBDC. Now, that's going to be the central bank, but there needs underlying technology to do that. Someone needs to distribute that. Traditional currencies have always been distributed by banks. How do they now distribute digital currencies? Once they're distributed, someone needs to accept them, right? I mean, there's no point in having currency in your wallet, digital wallet, which nobody accepts, because then you can't buy it, can't use it. And then once that happens, someone needs to exchange them. Someone needs to be able to take the digital CD and exchange it into a digital Naira or e-Naira without creating complexity. So there's a lot of pieces in the pie that need to really be addressed. And I think once we start to get some of that in place, we'll find this starts to take off a lot faster. But again, I'm a huge proponent. I believe, and these are all things that we at Crown Agents Bank are constantly looking at to say, where do we facilitate that? That's really the onus of banking, because that's what we need to do. And then where do we step back and say, that's not really our dictate, let's make sure that someone else can do that. So those are the key drivers.
Thank you both. Those were brilliant points. When we discuss CBDCs and we look at obviously legacy systems and moving towards the future, we have to concentrate and also pay attention to regulation and how it impacts these strives and how it could promote, it could promote these strives that we're trying to go into. So regulation is very fragmented in Ghana. And if we look at, for example, it's fragmented in Africa, but if you look at, for example, Ghana, where it sits, they've made a lot of strides in 2020, where the Minister of Finance issued a lot of policies and regulation in which to promote DFS in the country and to make the ecosystem what it is now. Ghana, for instance, looks to be a digital-led financial sector with sufficient technical and supervisory capacity to develop regulation that is technology neutral, device agnostic, principle-based, and proportional to risk, while at the same time increasing financial stability, integrity, and inclusion. This is absolutely a mammoth task, but where Ghana is aiming to do that by making sure that the regulations that we have, it enables this. So the question that I have for you both as well is, looking at regulation as a whole, I know this is a really tough question, especially on our continent. Is this a pathway to, are they acting as a pathway to success or a restraint?
I'm going to take that one first, Gillian, if you don't mind. Yeah, at Crown Agents Bank, we are a highly regulated financial institution, right? We fall under the UK regulations, as well as we have to comply with regulations in all of the geographies in which we operate. So I understand, a lot of that. And I think we as people in the industry have to realize that the regulators, I view them much as school teachers. I mean, they're there to ensure that we stay in line. And the minute we get away from this entire concept of, are they creating problems for us, to the fact that they are facilitating us doing it rightly, we will find that regulation actually meets, a lot of our needs. Now, that doesn't mean that every regulation that comes out is correct, but it has the right intent, right? And I think we as people in the industry need to facilitate
something like Facebook's DM, that there's not one country that can do that, because it affects many billion people around the world, many countries around the world. So now the G20 took this role and tries to elaborate up a little bit more on a supranational level. The third point I want to make is that very often regulatory authorities are not really prepared because the expertise is not there, because these authorities should also be equipped with appropriate technologies like RegTech, for example. So If you have robots communicating on blockchains with wallets, so a wallet that is not sitting with not institutions, but you regulate systems, this is a very different approach. So there is a question whether then regulatory authorities should also submit code and also be able to have that coded and not only so yeah, these are my three cents here.
Yeah. Thank you both. These are obviously well said. And for me, at JUMO, we are financial inclusion champions. We're customer centric, and most importantly, regulation is important. So we work continuously with the regulators across the markets that we're operating in order to achieve our goals. It looks like we're almost to the end of our fireside chat, and we have tackled a lot of crucial information. And as you can see, we cannot obviously answer every single question on this topic. One of the things that we can look at is everything that we said, and maybe we can leave a few nuggets for everyone on the call. With everything that we discussed, how will legacy systems innovate their business models to drive more growth? This is a question to you both.
I'll take that one first. Sorry, I don't want to sound greedy, but you know, I think it's fascinating. I think I see legacy systems either have to adapt or step out of the way, right? I mean, the first thing we have to accept in this market is that change is imminent, change is happening, right? So that I think is a given. Once we accept that as an organization, then the next thing we have to do is how do we either decide to take part in that change or step out? And I think, you know, you'll find most of the leading organizations tend to decide to take part in that change. We at Crown Agents Bank, I often tell people, institution that has been injected with FinTech hormones, and we are completely different and jumping around, right? I mean, we are active in the space. Financial inclusion is a huge piece for us. We see that every single day. We facilitate financial inclusion. We look at what we are doing in terms of aid and those kind of things. So they are delivering on the sustainable and, you know, those kind of goals. And that's something that's prime for us. I mean, we facilitate most flows of aid organizations globally. And then add to that the layer of how do we constantly adapt? So today we are going to mobile wallets. Will this migrate on to biometric wallets? I mean, is it, you know, possible that someday we will walk into a store, we'll have an instrument that scans our irises and then decides, okay, this is, you know, John Smith and he has so much in his bank account. And as I pick up each item, it automatically deducts that from my bank account and I just walk out. I mean, that's really the future of technology. So from the industry perspective, I just say, step up and take your place or step out, right? And that's really going to be the core driver.
Yeah. You heard it, adapt or step out of the way.
Absolutely.
Thomas, would you like to say anything?
Yeah, I think when it comes to new business models, you have to look at 4 different perspectives. One is the what. So what product or service are you looking at? And I think especially if you look into sustainable FinTech solutions, which provide novel products or services like, for example, blockchain-enabled supply chain finance in agricultural supply chains that are especially also important in Africa, or the digital currency-enabled peer-to-peer payments for solar energy. So these are all very novel applications and services that really lead to business model innovation. The second dimension is how that service is delivered. And there we come again back to the DeFi discussion, which of course leads to the disintermediation of the existing stakeholders by providing services without any financial intermediaries, like Bitcoin has shown. But there are also other areas that are touched now, like investments with Yearn or financing with AFF. So all areas are now coming into play, and this leads to a broader economy change, which is also happening more on a peer-to-peer basis, where the real economy stakeholders have another role. Then third, who is delivering that? Well, we all already mentioned 20,000 startups and the large, big tech players. They're operating either in niches or providing a very comprehensive customer service model, like Amazon, for example. So the question is, who will fill that gap in the future? And the fourth one is then why? Why would a customer choose your service? You also have to re-ask that question. If customer preferences and requirements are changing, then maybe the step from clicking that button or
Thanks,
that
Thomas.
button closed. Yeah.
Definitely some amazing points. I hope everyone has enjoyed the panel discussion. What I'd like to leave you with is a quotation from Monique Cohen from the Microfinance Opportunities Conference in 2013. Instead of products, we should focus on solutions that address the problems and meet the needs of all people. Instead of place, we should focus on the customer's price, we should focus on value. In particular, the benefits relative to price viewed from the context in which poor people live. And lastly, instead of promotion, we should focus on education, providing information relevant to the customer's needs to each point in the purchase circle. Everything that we discussed today, hitting upon our legacy systems to regulation, as well as the changes to business models. And like Thomas rightfully set out the three main points that he's thinking about. When we think about the future when it comes to financial services, it's also about keeping the customer at the true north. So I hope everyone joined the Fireside Chat and reach out to us if you have any further questions, and we'll be happy